Markets to Watch, sponsored by Pagetrader.com, starts now.
Welcome back to CEO Money. I've got David Williams, Pagetrader.com on the show. David, how have you been?
I've been great, Michael, and thank you. I hope you've been doing well as well. We missed you.
Oh, thanks. You got me right in the heart. Okay, good shot, man. All right, we got a big drop in the S&Ps today, down 27, almost 28 points. What happened?
Well, we're purely technical traders. I'm sure there's news related to perhaps Italy and some other things that are in play, but we have been noting to our people that until and unless the S&P can get above a daily close above 27.29, this is the S&P 500, 27.29, that if they couldn't close above it by the time this week started, which is Monday/Tuesday of this week, that we would be vulnerable to a decline into the 70s, the 2670s. They weren't able to do it. They tried over the weekend or, over the holiday to do it. They spiked up pretty good. They got all the way up to 37.75, 27.37, but they still couldn't close above 27.29. And our forecast came true that if they couldn't do it by today, the market would break and go straight down to 27s. We actually forecast 26.72 to 26.70. We've made a low of 26.75 today. So that may be all that they can do. But that was the call. Technically, it has to do with forces that are at work in the market and the way they play themselves out. The market only has a limited amount of time, Michael, to get a certain thing done. And if it can't do it, then it does a different thing. And that different thing was what we forecast, which if they couldn't get above 27.29 on a daily closing basis by the end of the week or by early Monday today, they would smash down to 26.72, and today's low has been 26.75. And at that point, we're down, pretty close to 40 S&P points.
Do you think this is a sign of bigger things to come in that direction?
Not yet. As long as the market, this is the S&P 500, as long as the S&P 500 closes above 2670, the 72 to 70 level that we've been forecasting, believe it or not, we're still amenable to new longs, and that will be because tomorrow is the on-time day, I believe, for a bottom now in the S&P on the daily chart. We're very close to a bottom. So if you check your paper or check your screen, if we close above 2670, and we're at 2690 right now, we bounced off it really nicely.
Right.
That means that we're not looking for the big wide open break. The market is in a somewhat precarious position, but as long as we're above 2670 right now, we think as time goes forward into Wednesday and Thursday, if they're not below that number, you don't have to worry about a crash or anything further than this for the time being.
Yeah, I know that this is just a coincidence, but on a daily basis, that is exactly where the 50-period moving average. I know it's different than the technology you use, which
Sure.
yours is much better. What else are you looking at?
Well, we've got a few things. We just today, the soybeans completed a very important forecast that we put out 2 days ago. On the Thursday of last week, we instructed everybody that they could sell the July soybeans short anywhere at or near $10.48, and that soybeans would decline from there to 10.30 to 10.29, and they would do that into this week. Today, the low was $10.28, and the high was 10.49 today. So we had a beautiful soybean trade, and we're done and out of that market right now. We're flat in gold. We're flat in the bonds, which had a tremendous rally. And I do want to say something about the bonds. A lot of people do know, some don't, that the 30-year Treasury bond market is a very big part of how the interest rates for the economy work. If that bond market is going down, interest rates are going up. If the bond market goes up, it's inverse, interest rates go down. We had forecast that if this month, the month of May 2018, if it closed above 143, then bonds will be in a strong position for several months. So we are believing now that we're going to close the month of May above the level of 143 in bonds, And that means we believe that bonds, with the usual pullbacks, but we're going to be strong in bonds. They're going to be a trend sideways to up for several months. That means interest rates will start to recede again and go back down for a couple of months here.
Or
and we'll have another forecast.
Or they'll just be pushing a lot more money into the economy.
Yes, that's a good way of putting it. And, the Fed notes indicated that the Fed is willing to let some inflation get the market, get the economy heated up a little bit. They're willing to tolerate some of that before they start raising interest rates again to put sort of a lid on that. And I think that was a very clever and a very wise way to manage where we are right now. Is let's let it run a little bit. Let's let a little inflation in, and then we'll manage it later in the year with a little more interest rate rising of the core interest rate.
What about the crude oil market? It went almost exactly to where you said. I think the high 72.90. That's pretty close to your target. I think it was, right?
Yes, it is. And we had forecast that back in March that the crude oil then at 61 would advance $13,000 per contract, which is basically $13 in crude, up to $73, and it would touch $73 on or before June of this year. And just about 8 days before June, crude did make the high of $72.90. We also forecast, but not on your program, but we did forecast for our people and for others that any break of $70 after that happens would put the market in a very bearish position, and the market got below 70 yesterday, last week on Friday, and they cracked them real hard, and they broke down real good, and today we made a low of 65.80. We don't have a new immediate forecast for crude, but we're believing that we're very close to a reflected wave, what we call a reflected wave bottom, daily bottom in crude. So we're very close, we think, to a daily bottom.
Okay, so potential daily bottom in the S&Ps, potential daily bottom coming up in crude oil. I mean, this is really critical information if you're a trader.
It is for us, and it is for our group. If we go a little lower in crude, thanks for saying so, if we go a little lower in crude, we will actually trigger what we call a weekly bottom, which means that we would be looking for a very important low to occur on a certain week. But as it stands right now, it still is in the daily category. And crude oil isn't going to go all the way down. Crude oil, this is a pullback in an existing uptrend, and that's how we're treating it, and therefore we're interested in buying again.
Got it. We got about a minute left before we go. Any events coming up that you can tell our audience about?
We do. We teach our methodology, which is called the Square Principle, over at the Mirage Hotel here in Las Vegas twice a year, and we have that coming up on September 8th and 9th, Saturday and Sunday, here in Las Vegas at the Mirage Hotel. If you want to learn more about what we're teaching and how we do what we do in the markets, have your listeners come to Pagetrader.com, P-A-G-E, trader.com, and check it out. They can take a free trial and investigate everything that we're doing. We're even having a webinar this afternoon at 1:30 Pacific time. They can go to our website, click on our calendar for today's webinar, which is specifically about the Square Principle and our upcoming seminar at the Mirage.
Got it. Thanks, Dave. I'll talk to you tomorrow.
Great to have you back, Michael. We'll see you then.
Thank you. David Williams, Pagetrader.com. You've been listening to CEO Money with Michael Yorba. Again, if you want to know what the market's going to do tomorrow, you should call Dave today.